Hey team, it's Josh here, and I've spent the last 10 years helping businesses grow their finance department so that they can succeed and not go broke. Cash is one of the things that will make or break your business. Often, business owners don't know whether they have enough in the bank or too little. Either they're spending every dollar they have, or they're squirreling it all away and not making good use of that cash. That is why today we're going to talk about using cash as a strategic asset in your business. We will specifically look at how much you should have in your operating bank account so that you can ensure your business runs smoothly and you're not at risk of going broke or bankrupt. So, first off, I want to think about how cash impacts the ability of our business to pay bills and the couple ways that that can come about. So in this scenario, I have a graph. We have liquidity and solvency, two big words for liquid, ability to pay current bills, and solvency, ability to pay long-term bills. And today, with what we're looking at with our operating bank account, we're making sure that the bank account is liquid enough. But you do still want to take into account those big long-term solvency risks. So it's making sure that we're not running into this situation where we can't meet weekly bills and we can't make payroll. When thinking about how much cash we want to keep in the bank account, it's going to be 2 months worth of expenses without terms. Looking at the profit and loss here, you can see we have revenue at the top, we have net operating income at the bottom, and I put a box around the expenses here that we want to include. So primarily it's going to be labor, facilities, marketing, salaries, payroll taxes, and benefits, and other. And so in this case, we would take the 425,000 plus the 294,500, and then we would divide that by 12 and multiply it by 2. And in this scenario, that means we would have $120,000 that should be in the bank account. And this is the amount that's going to make sure we can continue to pay bills, but also that we don't have so much cash laying around that it's not being put to good use. What this also assumes is that your line of credit is fully repaid, so we're not drawn down on the line of credit. We've paid up our taxes, we've paid up anything like that. And we're able to pay off our credit cards every month, so we're not running balances on those items. So we want to have enough cash to de-risk the business. Like I said, assumes we're making installments, and we also want to beware of seasonality. So if your business has really large influxes of business at certain types of the year, at certain times of the year, make sure that you're keeping that in mind and that you factor that in, especially if you're in a seasonal business where maybe you're paying bills faster than you're collecting cash. If you know you're going into a busy season, you should maybe have more cash so that you're ready to mobilize. Same thing if you're going to be at the end of a busy season and you know you're going to go into a slow season for a while, you may want to retain more cash than normal just to sustain you through the slow season. So once you know that you have enough cash, what you can do is, here I've put together just a nice chart. So it shows kind of a lower bound, upper bound, 2 months being the lower, 3 months being the upper. And once you've had a number of months where your cash is sustaining up here, then you know that you can withdraw some of the money. And when you're going to withdraw that or do something with it, you have a couple of different options. One is maybe reinvesting into the company, buying a large piece of equipment, making that new hire, implementing a new software, paying down debt, things like that, everything that's going to improve your business. You could set it aside for future purchases, so maybe put it into a separate bank account where it's just sitting ready to go so that maybe if a competitor has a real issue, you're going to be able to jump in and purchase some assets for really cheap. Or maybe you just need to save up a lot of money for a really large equipment purchase, or you want to buy a building sometime down the road. Put that money into a separate account, and then it will be there for you in the future. And then the other option is that maybe you just want to take it and use it for personal spending. So maybe you want to go on that vacation, you want to pay down your mortgage, You want to invest it into a different area so that not all of your cash is tied up in your business and your house. But if you're going to do that, make sure you think about the tax implications. So that's the fun part, is once that operating account is high enough that you know you can pull money out without putting your business at risk. This is a quick summary of operating cash. Make sure that you look into it for your specific situation. And if you have any questions, I'd love to hear them. Thanks. Bye.